Hi everyone. Today I'll provide you with a brief update on the industrial sector. The first thing that I want to say is industrial remains near the top of the list for most investors in terms of being a preferred asset class. This is during a time when in fact operational performance has slowed. This year we expect deliveries to outpace absorption once again, causing an increase in the national vacancy rate to approximately 7.5% by year end. This continued interest flies in the face of whipsaw market dynamics. Think about questions concerning the economic performance going forward, impacted largely by tariffs. And how will these tariffs play out? How long will they persist? What will the impact be on inflation? And again, economic performance. What about consumer sentiment? How will this play out, and will the consumer pull back? And that certainly would have an impact on industrial space demand and expansion requirements on the part of retailers in particular and how they see the future. So why such continued investor interest in the face of these uncertainties and where exactly the future is going, at least in the near term? There's several reasons. The first would be pricing. Cap rates have responded to the increase in interest rates as well as the subdued growth pattern of rental rates in the period that we're living in right now. Consequently, the opportunity to get involved in the investment is more readily available today than it might have been just a couple of years ago. Looking at the longer term, investors also draw confidence from what they see as a dramatic slowdown in the amount of deliveries over the next few years. This slowdown in deliveries is amplified somewhat by the fact that the lead time of delivering new product in the market is now nearly 2 years. Something else to remember is we're now just coming off of what I might refer to as a post-pandemic surge in industrial space demand. We went through a period of time where there were great concerns about supply chains and making sure that suppliers had the right amount of inventory to meet consumer and business demand. That time has come and gone now to the extent that we've rebalanced. We're living in a more normalized supply-demand relationship, and the anticipation would be, given the fallback in deliveries anticipated over the next few years, we're going to see vacancies begin to decline starting again in 2026. So wrapping up for today, while we are still living through a short-term, I'll use the term again, rebalancing of supply and demand, and vacancy rates that are actually increasing modestly still as we continue through the balance of this year, the mid to long term looks very bright in the industrial sector, and we expect strong performance out of the product and strong investor interest going forward through the balance of this year and beyond.